In terms of my role here at Fluidly, just to introduce myself, first of all, I'm the head of engagement here, and I'm primarily responsible for the successful onboarding of our new accounting partners. I joined the team back in late 2016 as the first employee, and I've had the chance to see the company and the product, more importantly, grow and evolve over that point in time. So really excited to be here today, and I'm more than happy to answer any questions that come through. When I spoke to Simon about this beforehand, he said that quite a few people joining today would already have a good sense of what Fluidly is about. So I won't kind of spend too long focusing on that. I won't be presenting any slides. We'll just dive straight into the product. But just for those who may not have as much context, Fluidly is an intelligent cash flow product. We've been in market since late 2017, and we now work with around 500 accountancy partners of all different sizes across the UK. In terms of intelligent cash flow and what that means, we're very much of the belief that accountancy tools are very, very good at telling you what has happened, but they're less good at telling you, so what does that mean for a particular business, and now what can you do about it? And really that's where we see Fluidly as coming in. A lot of the research that you're able to find out in the marketplace, and a lot of our conversations with business owners themselves, suggest that managing cash flow is one of the biggest pain points that your clients face. And so through Fluidly, we see you as being able to deliver cash flow-led advisory at scale to your clients. So what I'll do now is just share my screen, and we can actually go in and take a look at how the product works. So Simon, if you could just give me a thumbs up or a shout to let me know that you can see Fluidly in front of you, that would be fantastic.
I can see it, Luke, definitely.
Okay, brilliant. All right. Okay, brilliant. So the screen that we land on here is the portfolio view. And this is a view that is particular to you as accounting users of Fluidly. Now, what it does is allow you to have a view of all of your clients in one place and to keep tabs on what's going on. One of the biggest bits of feedback that we get from our accounting partners time and time again is that outside of your typical catch-up cadence, it's really, really hard to know what's going on in your clients' businesses. And so the portfolio view takes some steps towards allowing you to do that. The example that I've got here, which is using a demo data set, only has one connected bit. If you were to sign up to Fluidly, what you would see is all of your clients that are using either Xero or QuickBooks listed here down the left-hand side. And then running from left to right, sorry, you would have some headline figures relating to their cash flow. So you would have their opening cash, their debtor ledger, their creditor ledger, and their last full month's revenues. Now, in terms of how to use the portfolio view, one of the things that I'll often look at is the relationship between the different numbers. So I'll have a look at a business's revenues and their debtors, for example. If their debtors are multiples of their last full month's revenue, it may be indicative of a business which is struggling to get cash in, and it may be that they need assistance with their collections. If you look at the creditor ledger, for example, it's often useful to compare that to their current cash balance to see if they have the cash available to meet those supplier obligations that may be falling due in future weeks and months. So really the way to use the portfolio view is to keep an eye on your clients at scale and to use that as a kind of jumping off point for further investigations that you can then go on to do through Fluidly. It's also worth mentioning that you can use the search bar up here to find clients if you do have a number of them using the product, or if you have lots of clients connected to Fluidly, and you can also invite them into the product from this point onwards. If I click in here, this is the first point that we enter the product at which both you and your clients, if you invited them into Fluidly, would be able to see.
Luke, I just got a quick question from Kim. How often that dashboard? How often is it updated? Is that real time or?
Yeah, it updates every hour. So what Fluidly does is once it's synced with Xero or QuickBooks for the first time, it will maintain a relationship with the general ledger, and it will look for anything that's changed on an hourly basis and look to update that information.
Excellent, thank you.
Perfect. So in terms of the way that Fluidly is set up, I mentioned this is a view that both you and your clients would share. There are 4 different sections that you can see listed across the top here. we're going to start on the home screen. And as you'd expect, it provides some kind of headline information around a business's cash flow. And really, if the portfolio view is a kind of jumping off point into a particular business, once you're in here, this is very much about providing you with some early insights that you can investigate in a more thorough way as you go through the product. So if we look at what we can see here, we can see how a business's cash position is set to evolve. We can see that we're focused here on what's meant to happen over the next 30 days. We can see that we're projecting a 20% uptick in cash in, and we're also presenting, we're predicting that their cash out will decline by around a third, which in the current climate is probably good news. It's worth mentioning that you can move this between, you can toggle it between next 30 days and the last 30 days. And one of the things that I found interesting when I looked at this data set earlier on is that over the last 30 days, they'd actually seen a 152% increase in their cash out. So whilst we're predicting that their cash out over the coming month may actually be going down, that's only on a month-on-month basis. So already we have an insight as to the fact that this business may be struggling for cash flow, given the imbalance between cash in and cash out. As we go down through the page, you can also see the largest outstanding invoices expected to come in and to go out. And again, you can toggle that between the next 30 days and the next 7 days. We've also got some really interesting insights here on the right-hand side of the page. Again, if I were an accountant or an advisor looking to kind of share some insights with my clients, this is where I would be starting. The first box that you can see here on the right shows that it really focuses on a business's collections. And what we can see here, and it's worth mentioning that the data that this is using is anonymized, which is why you've got those asterisks sitting here, and why the data might look slightly odd. So what we can see here, if we're focusing on collections, is that 5 of their largest 5 customers make up 100% of what's currently overdue. Now, in some respects, that's really good, because what we know is that if we do want to focus on getting cash into the business, it should be relatively low effort. It shouldn't be too time consuming, because there's only 5 clients that we would want to go after. The flip side of that is that the business may be concentrated around a very small number of clients. And if they were to lose those, or they were to not pay for whatever reason, that may have a material impact on their cash flow. It may also impact their ability to receive funding from certain lenders who may have requirements around concentration ratios. So these are the types of conversations that you can bring up and pull out using the insights that Fluidly provides. If we continue down the page, we can see that it shows their collection days, a relatively simple statistic, but it's amazing the number of business owners that I've spoken to who said that they or a member of their team spends a huge amount of time calculating these numbers manually. So having that there, really, really useful. And we can also see that around a third of invoices that have been raised over the last 90 days were paid late. So again, that may or may not point to whether or not there's a collections issue in the business. Now, this last box here, I'll just pull this up, minimize this to make this easier to focus on. But this last box here is probably one of the most impactful bits of information here in Fluidly. So it's saying that there are 63 invoices that are currently live on this business's ledger that have passed their expected date. Now, the expected date is a concept that exists within Fluidly. And it's based on the way that a customer has paid or a supplier has been paid previously. And rather than looking at due dates as to when that invoice will be paid, it will look at their payment performance previously. Now, an invoice in Fluidly can pass its expected date for one of 2 reasons. Either it's genuinely old and overdue, i.e. it hasn't been paid, in which case there's a conversation as to why and how that business manages their cash in and their cash out, or it's because that has actually been unreconciled in their Xero or QuickBooks, in which case there's a conversation about their bookkeeping and how they're managing that. Either way, you can kind of use Fluidly to really deepen those interactions with clients. The last thing that I just want to point out on this page is the V80 Returned Reminder. This is a relatively simple tool, but again, has proved particularly impactful when speaking to clients. What it does, when you first set up Fluidly, it will ask you to put in that particular business's VAT quarter. When you're in the quarter, it will provide a countdown as to when that quarter ends. And once that quarter elapses, it will then tell you how long you've got until you need to make that payment. Obviously, VAT payments being one of the key causes of cash flow concern for any small or medium-sized business.
Luke, just to jump in there, Luke, just so I've got an understanding myself, that's set expected dates for 63 invoices. Just to confirm, you said that Fluidly calculates that based on previous performance. Is that right?
Exactly that. So the expected date within Fluidly is based off of how a customer has either paid a business previously or you've paid a supplier previously. So to give you an example of that, Simon, if if one of your clients has 30-day payment terms, for example, but they always pay you around the 37th or 38th day, Fluidly will predict that that's when that invoice is going to come in.
And where that says underneath it, it won't be included in the cash flow until they're set. Is that's something that you have to go? Are you going to show us how that works?
So I'll come on to that next. And I think that's actually a really good example of how to get started with Fluidly, and one of the first tasks you should do when looking at the cash flow forecast.
Excellent, thank you. And then Perfect. Slightly off the wall, Annie has asked, is it a real company that we're working on, or is it a nod to Ace Ventura?
So Annie, it's actually both. It is a real company, and one of the questions that I'll ask in a second is if you can understand what the business may do. We've anonymized the data, so with the client's permission. So it is also a nod to Ace Ventura, put in by our engineering team. So it's actually a bit of both.
Okay, that's over my head, that is. So it was one of those questions where am I falling?
You're just there to ask it.
That's right. Am I falling into a trap or not? But anyway, there you go. Sorry, Luke.
Perfect. No, great question, Annie. So here we're now on the forecast screen, and this has 3 different sections to it, which we'll go on to cover over the next kind of 10 or 15 minutes. And this is really the kind of meat and bones of Fluidly. And Simon, one of the questions that you asked is how do we then begin to set those expected payment dates? And that's one of the things that I'll come to in a second. But I think 2 things that are really, really important that or really useful to understand before we get going. One of them is how Fluidly generates this forecast, and the other thing is how to use this graph at the top of the page. Now, in terms of the way that Fluidly generates this cash flow forecast, what it will do is it ingests all of the data from a business's Xero or QuickBooks, and then it will break a business down by its nominal codes or its account lines. Within those account lines, it will then look for patterns. So if we're talking about cash in, it will say, okay, we're looking for customers that pay us a certain amount with a certain frequency. And similarly for cash out, it will look for patterns there within different account lines. It will do that over and over for each different account line or nominal code until it's built up a full picture, and it will wrap that up into the cash flow forecast that you can see here lower down the page. Now, the cash flow forecast, when you first view it, it's simply a case of expanding out the different sections, which are broadly speaking confined into receipts and to payments, and then taking a look at the cash flow forecast that Fluidly has produced for you. And as I said, within each of those nominal codes, it will have picked up patterns on an individual counterpart basis. So certain account lines may have predictions for a whole number of different customers or suppliers. Others that are less active, there may well be fewer predictions based on that. So I mentioned when Simon asked Annie's question that I would kind of ask a question as to what it is that this business does. I know you can't jump in and answer, but if you just have kind of 20 seconds looking at this, it'd be great for you all listening today to kind of have a think in your heads there.
And just while they do that, Luke, I've got a question from David. Looking at the graph, the forecast pattern looks nothing like the history. Am I missing something? I see what. So what I think what Dave means is that the graph is going down, and then all of a sudden after April it starts to go back up again. Is is there supposed to be some correlation between that, or is there an explanation? Do you know?
So I think once we look at the we can actually dive into the forecast and understand the key drivers of it. But I think what we've done is our best. The way that the forecast works, and the way that I've just explained, is it will look at that kind of history, but it has a weighting to a more recent history. So if we're looking at what's happened over the last 90 days or so, that may be more closely represented in terms of the forecast that Fluidly's produced going forwards.
Okay, and then another question from Neil. Can you do 3-year forecasts?
So Fluidly produces a forecast which goes out 12 months is the furthest that we can do at the minute. So one of the questions we often get is, can you do longer term forecasting, 3 or 5 year forecasts? Fluidly is kind of more closely focused on operational cash flow rather than longer term forecasting at this point in time.
Excellent, brilliant, thank you. And then they're coming thick and fast now, Luke. Are the nominal codes populated by purchase invoices only or by bank payments also?
So the nominal codes will be based on what you currently have set up in your general ledger, so within Xero or QuickBooks, and it will look at nominal codes that have been active within a certain period of time, and then include any of those in the cash flow forecast. So you won't have every single nominal code you've ever set up in a business's Xero or QuickBooks, but you'll have those for which there is activity, I believe, over the last year.
Okay, well, I think what then, and you can elaborate on this, Donald, if I'm asking the wrong question on your behalf, but when you said earlier that the cash flow forecast is populated on the expected payment dates of invoices, does it also include in that cash flow forecast direct debits, perhaps, that haven't got purchase invoices, or straightforward bank payments?
I understand
wages,
that. So,
for example, yeah.
Yeah, if there are reconciled transactions, direct debits being a very good example, then yes, Fluidly will pick up that pattern and project that forwards. Absolutely.
Brilliant, excellent, thank you.
Perfect. Okay, great. So no, some fantastic questions coming in so far. Thank you. So to provide an example, and I think, Donald, this may cover some of the questions or the question that you just asked there in terms of how Fluidly works. If we take this example here, and by the way, this is a business which brokers mortgages for people buying homes abroad. But if we take the example of the life insurance line, if we click into a historic month, and you'll notice because we're looking at because we're looking at the receipts section, Fluidly has defaulted to cash in. If we were looking at a payment section, it would default to cash out. Now, if we look at what happened here in the month of April, and this is a really good exercise to go through with your clients when you're first showing them Fluidly, because I think it really brings home how the forecast works. We can see here that there are a series of what appear to be weekly payments from a client called AIG, as well as a smaller payment that came in from a client here beginning with R. I believe they're called Royal London. Now, if we go forward into the month of May, what we'll see is that we've got a slightly different view. So here, not only have we got payments received, but we've also got a forward-looking prediction as well, because we haven't quite finished the month. So true to form, AIG have paid in on a series of weekly payments. And then we've also got another couple of payments, one here from Royal London, as we saw in the month of May, and another one here from a client beginning with A. Now, with May being a longer month, Fluidly has actually predicted that we will have one more payment come in. And whenever you see a prediction in Fluidly, you'll see 4 pieces of information. You'll see an expected date for that prediction. You'll see a counterparty. You'll see an amount, and you'll see a frequency. And that frequency will be one of daily, weekly, monthly, or quarterly. Now, if we go forward into June, what we'll see is that we've actually got those predictions being generated here. So we've now got a full series of predictions that Fluidly has generated. And you can see that it's got expectations that AIG will pay in on a weekly basis, and that we'll also see payments from Royal London and this other client that I mentioned beginning with A. And you can see that whilst the AIG ones have been listed as weekly, Royal London has been listed as monthly, and this one here as monthly average, which effectively means we believe that they pay it on a monthly basis, but it's more sporadic. So we're going to list it as monthly average. The other thing you may have noticed is that we've also got an outstanding invoice for AIG. Now, the way that we can tell that this is an existing invoice, other than the fact that it has a big title saying as much, is kind of twofold. We've got an invoice reference, which is again taken directly from Xero, or which matches up to the 1 and 0. And we've also got a calendar icon here. Now, with any live invoices that are currently in Fluidly, you have two options when you're looking at the forecast. The first is the ability to use the calendar icon to move this around. So if, for example, we know that this invoice is going to be paid later on in June, then we can actually click the calendar icon and reflect as much in Fluidly. We could begin to move this around. The other thing you're able to do if you do want to is hide the invoice. If, for example, you know it's not going to be paid, it may be showing up as bad debt, then you can do exactly that. Now, the final thing that I just want to talk about when it comes to predictions is the ability to add a prediction. So Fluidly, the predictions that it's generated here, we very much view Fluidly as a kind of very good first guess. It will get you 80% of the way there, but there will always be bits and pieces that you may want to tweak. Now, when it comes to doing that, you can simply remove predictions, or you can begin to add new ones. And I'm conscious there are quite a few questions coming in to Simon at the minute, so I'll just finish off this bit with the predictions here, Simon, and then I'll pop over to you. I can see the red light flashing in the corner. We've kind of got this live radio phone-in type setup going on. So I'll just finish this bit, take me 30 seconds, and I'll happily take the question. So in terms of adding a new prediction, you have the ability to do exactly that here in Fluidly. So if we search for begin typing in a customer here, what it should do is pick things up, and it's running slightly slowly because of my very dodgy Wi-Fi in my house, using Zoom and running Fluidly at the same time. But if we say that we want to put in a monthly payment that we know is going to be for £1,000 or £500 for this particular client, and we know that it's going to run for 3 months, so June, July, August, ending towards the start of August, then we can pop that in here. You also have the ability to kind of flex that on a month-by-month basis. So if we know that that's going to go up 25%, it's the beginning of a new contract, then we can add this prediction in here. And what you'll see is that that's then been added, and that will refresh shortly. That's been added with a big silver button here. And as we click out, you'll also have some purple icons sitting in the top right-hand side of the cell to draw your eyes as to where those changes have been made. Now, Simon, I've been talking for a little while there, so tell me, we've got a few questions that have come in.
Yeah, there's a couple of questions. Adrian and David's questions are the same, basically. Where we said earlier about, can it predict the cash flow, the direct debits that are going out? The opposite of that is, can it, if it's a retail business or a restaurant where they don't receive invoices, or don't issue invoices, they only receive cash, can it predict based on the cash?
Yeah, absolutely. So it's a really timely question, actually, because so the quick answer is yes, it can, because what it will do, it builds up a picture by looking at that transaction, the reconciled transactions, and it will say, okay, there's an amount of cash that comes in on a daily basis, and that may show up. If you take the example of a restaurant, it will show as till on a daily basis. Now, as a result of having more and more restaurants and bars and those kind of businesses begin to use Fluidly, that was when we introduced a new frequency in the forecast. We didn't used to have a daily option, and we actually introduced that off the back of working quite closely with a number of clients who said that was really, really important to them. So yes, it can, and it will pick up daily, weekly, monthly, however you reconcile those.
So just building on that, then, is it possible to do the forecasts daily, weekly, and monthly as well?
So that's one of the next things that I was actually going to come up to. So I mentioned. Okay.
So I'll leave that then, Jeff, and then that'll. So I'll mark that one as answered in a bit. Annie has asked, does it understand the difference between a direct debit that's gone out that hasn't got an invoice yet? So say, for example, we've got an electric bill. And the direct debits have gone out, but the invoice isn't received perhaps until month 2. Does it Ed, does that work?
So Fluidly will begin to populate based on what's been reconciled within your general ledger, so Xero or QuickBooks. So if that has been paid and has been reconciled, then that will show as a payment that has gone out. And then if you pair that, if you reconcile that back to an invoice, latterly it will update, but it will show that payment as having gone out if you reconcile it to a particular counterparty. Yes.
So it will show it as cash out until it's reconciled, and then when it's reconciled, it will then base it on an invoice going forward.
Yeah. So once it's reconciled, if the payment's been made and that's been reconciled within your general ledger, then that will update and fluidly. Yes.
Brilliant, excellent, thank you. I hope that's answered your question, Annie. The second one we're definitely going to answer, but if not, then can you just post a subsequent question for me, Annie? Neil has asked, some items will be a one-off or unusual, such as current government grants, etc. How do you stop that being used in the projections?
So it's a good question, and I think there's kind of a couple of points there. So in terms of the way that Fluidly generates this forecast, for something to be included as a projection, Fluidly needs to see a series historically, and we define a series in our models as being 3 payments, and it will look to pick up a pattern on that basis. So if you have a one-off cost or even something that happens twice, Fluidly won't necessarily pick that up as a prediction. So in terms of things like government grants or anything like that, you don't need to worry about that. The other thing is that there will always be things that Fluidly can't predict, and that's where the ability to, such as one-off costs, it may be if you have some legal costs or you look to move your office, and that happens once every few years, and that's where being able to edit and adjust the existing predictions that exist in Fluidly comes in really valuable. So I hope that answers that question.
It does, and it's important to get clarity on that, Luke, and understand, because obviously if you understand the shortcomings, then you can make sure that you play to the strengths. But yeah. So if I've got ABC Stationery Company, for example, that I've been working with for 3 years, yeah, I then move over to XYZ Stationery Company. Basically what you're saying is it will project on ABC because there's more than 3 invoices there. Yeah. But when we first move over to XYZ Limited, it won't predict off the first 1 or 2 or 3 invoices, off the first 2 invoices, but once you've got 3 invoices on, then it will predict off that.
Exactly that. And in the meantime, what you could do as you have that transition between ABC and XYZ is that you could simply remove the predictions that Fluidly will have made based on the history around ABC, input some predictions for payments out to XYZ until Fluidly begins to pick that up, and then it will simply get rid of them.
Work with it. Brilliant. Excellent. Thank you. David said, sorry, I don't quite know what he's saying. Sorry for David. There's nothing to apologize for as far as I'm concerned at the moment. And then Ahmed, I've got your question about the VAT. The VAT will definitely come up today because the VAT is one of the hot questions. Oh, and David said, based on the graph again, the forecast shows a steady increase and the history doesn't. How did that happen? So on that graph.
Yeah. So this is where, if we look back through a kind of 12-month picture, we may actually see something different. Now, that's not necessarily what we've seen there, but I think that's where looking into Fluidly and understanding the predictions that have been generated is really useful. So the way that I tend to do it is that I will go down through the forecast and I will have a look. I'll kind of eyeball the forecast and check that I'm happy with the predictions that Fluidly's made. If I'm not, that's when you can then begin to investigate the predictions that Fluidly's made and adjust them as you see fit. So I think what I would recommend there is just going down through the forecast and taking a look at those lines and trying to understand if there may be things that Fluidly has picked up that you wouldn't necessarily be happy with in the business. That's how I'd recommend approaching that.
Okay, so basically, as I want to say AI, I don't know whether you treat it as AI, but as AI as it is, it needs a sanity check, a human sanity check, in order to make sure that the data is reasonable given on the current circumstances. So in that scenario, the management could have made a decision in March, April, or May that means that the cash is going to change the way it's going forward, and Fluidly's predicted that off the back of those changes. Is that?
Yeah. Now the other thing that's worth mentioning within this is, and this is perhaps probably a slight shortcoming on our side as someone demoing this product rather than a shortcoming of the product, is that this is a data set that's used by a number of my colleagues as well, and we can see that there are changes all across the receipts here. So if I look into this one, what I may well see is that there are we can see that actually there are a load of predictions that have been added in here. So we've got two sets of £10,000 predictions that have been added into the forecast, which will represent an increase in the cash balance going forward. So actually, I think that may be slightly misleading, and I think that that's certainly been my undoing slightly here in terms of answering that question, something I will absolutely look to resolve afterwards, because that's an absolute stitch up. But I think that's a very good example of the purple icon that you can see in the top right hand side of each cell, serving to highlight where a change may or may not have been, where a change has been made. So that is most likely the reason for that.
Oh, they're brilliant. I think that explains that, David. Then, so that's yeah, people have been messing about with the data in order to improve the numbers. So that's brilliant, excellent.
Colleagues attempting to stitch me up, I'd say, by the looks of things. But it also points to a really interesting question about the graph as well, which is, and Simon, I think you covered this probably around 5 minutes ago, around how it works. So it will show you a monthly view by default, but you can toggle that to a weekly or a daily view if you do want to, and that will of course adjust the headings that you can see down below. And that really is down to preference as to how you would like to look at that particular business's cash flow forecast. In terms of other elements of the forecast here that I'd love to point out, you can choose which bank accounts you would like to include and exclude. And the reason for that is we're well aware that Xero and QuickBooks include all manner of things as bank accounts. So not only do you have current accounts and savings accounts, but you may also have PayPal accounts, prepaid foreign exchange cards, that kind of thing, counting as bank accounts. If you do want to, you can simply edit what is and isn't included there. Other things that are relevant to the graph here, we've also got the ability to edit a threshold, or to create and then edit a threshold. So in this business here, they've set a threshold as £100,000, and that's an amount of money below which they don't want their bank balance to dip, and to be able to monitor that. So what Fluidly has done is just pop that in here, and you can always have an understanding as to when you might dip below that. Now, the last thing that I'd just love to mention on this page here is around those excluded invoices. So Simon, you asked a question around how those factor into the forecast. Now, over the last couple of years, and when Fluidly was first kind of in market, and anyone who's seen the product a couple of years ago may be aware of this. What used to happen was once an invoice past its expected date, Fluidly would predict that it was going to be paid tomorrow, which would cause a big spike up or down in the cash flow. We've since taken another look at how we handle that, and we actually temporarily exclude those invoices from the cash flow and give you as the user the ability to determine when you think that cash will come in. And what we do here at the top of the page is divide that up by cash in and cash out. So invoices that have passed, customer or supplier invoices that have passed their expected date, and give you the ability to determine when you think that cash will come in. I think if we think about businesses currently wrestling with supplier payments, prioritizing those, seeking payment plans, that sort of thing, you can actually go through these invoices here if we set, if we look at supplier payments now, and determine when you want those to appear in the cash flow forecast. So we just simply tick the box on the left-hand side and set a planned payment date using the calendar icon there to bring them back into the forecast. Does that answer an earlier question around how we reintroduce those invoices that previously been excluded.
Yeah, it does for me. I just got a few more questions if we can, and I'm a little bit conscious of the time, Luke, and we've got
Yeah,
20.
no, I just noticed.
Yeah, we've got 20 minutes left. So just quickly, Annie's asked, how far back can you go? So if a client wants a cash in, cash out report over the last 3 years, for example, can you get that, and can you get it by nominal code?
So Fluidly goes 12 months back and up to 12 months forward for those using the pro version of the product. Anything back beyond that, Annie, I would recommend going into General Ledger and downloading a statement of cash flows, but Fluidly will give you up to 12 months back, and you can export that to Excel.
Brilliant. So that answers that question. I'll see your subsequent question on months. Annie, do you link with Zoho Cloud Accounting?
So we don't link with Zoho at this stage. No, we currently just work with Xero and QuickBooks, although we do regularly review the integrations that we're looking at. So if we hear something from a number of customers or prospective customers, then we'll begin to look at that again.
Okay, and then the last one that's not a VAT one. You said it takes a series of 3 to predict. So how does that work with quarterly income / expenditure? Does it mean you have to wait for 9 months? So if you change electric supplier, for example, and they send out quarterly invoices, and it takes 3 of those quarterly invoices to register, do we have to wait for 9 months before Fluidly does it automatically?
Yeah, so if it is quarterly, then yes, you would have to. Again, the way that I would handle that is if you have made that change to an electric supplier. So if we go down into the payments here, is there electrics? Okay, no, there's not. But I would simply add that in as a new prediction, and it would take you kind of 30 seconds, a minute to do that. That's a very good example of something that Fluidly, a piece of information that we wouldn't necessarily know, and it's much quicker as a user to simply go in and make that change.
Brilliant, thank you, Luke, and thank you, Neil. For me, that's an example of a great question. I'd never even entered my head, that question. So it's just, I think it's brilliant how the community comes together and asks questions like that for the benefit of everybody else. So.
No, and I think there are lots of fantastic questions coming in. Like you said, Simon, I'm slightly conscious of time, but equally It feels like we're getting a lot of questions as we go as well. So hopefully that we're kind of covering them off as we move through. So if the forecast is about kind of providing a holistic overview, the breakdown screen is really all around allowing you to drill deeper into certain customers or suppliers. Now, the way that this screen works, it's currently it will default to the calendar month that we're currently in. But if I pull this to the end of June, for example, just to look forwards a little further, what it will do is give you an understanding of cash in and cash out over that period. And the way that this reads is much more like a bank statement. So it shows you information on a day-by-day basis, and it combines predictions and live invoices alongside one another. Now, the reason that you would want to use this screen primarily is, as I mentioned, if you did want to drill down into a particular customer or supplier. And you can do that simply by using the search bar here on the right-hand side to find a particular customer. So if we look for AIG, we can see that, again, as we did on the previous screen, we've got a mix of predictions and live invoices. And as you could on the previous screen, if you do want to move this invoice around, it's simply a case of using the tick box and then following the prompts that you've got here at the top, either to hide it or to use a calendar to move that around. Moving from the breakdown screen to the next section, this is the goal planning tool. And this is a feature that we've built over the last couple of months, really in response to an overwhelming amount of customer feedback, both from business users and accounting users, as a tool to help you model different scenarios. Now, when we first released the tool, prior to the onset of COVID-19, there was a lot of focus on this scenario here, expand by hiring more staff. But as you might imagine, over the last couple of months, the conversation has very much turned to kind of different scenarios that you might want to model to keep a business above water. And if we click into this, what you'll see is that we've got a slightly different view from the one that we're used to. And what you can do here, I'm just going to zoom out slightly so we can see more of the screen, is begin to have discussions around different scenarios that a business might be looking at. So one of those first ones may be a decline in revenue. So if we use this slider here, we can see what a kind of 2/3 decline in our revenues does to our bank balance over time. Now, it may be that you actually want to pair that off against the receipt of a grant, for example. So you know that this particular business is looking at a government grant or a certain or a loan, for example, and you can model that in. So if we look here, what we can do is introduce the receipt of a grant payment. Now, we know that they're not, in this example, we know that the business isn't expecting to get that cash in for around kind of 6 weeks. So what we can do is pair that off. So we can see between now and the receipt of the grant that the bank balance is slowly declining, owing to that kind of 2/3 drop in revenues. But then once the grant money comes in, that actually it kind of very much reverses that trend and improves their cash balance significantly. It's worth mentioning that this is just one of a number of different scenarios that you may want to model. Other options here include adjusting a particular account line. So if, for example, you know that your advertising spend, you're going to reduce that dramatically, then you can model that. You can also adjust particular customers or suppliers. So again, it points to this ability to have the level of granularity that you want. And really those last couple of examples that I've mentioned, finding a particular account line or finding a particular customer or supplier, those are kind of brand new features that we brought in the last couple of weeks off the back of really comprehensive feedback that we've been getting from clients. So I think that's really useful to demonstrate as a way that we work with our existing partners. When you are looking at a plan, you have the ability to change the title of what you're looking at. You also have the ability to hide it. So if you're kind of having scenario A, scenario B, then you can bring certain elements of a plan in or out. Other things that you may be discussing with clients should also be covered here. So the likes of, if they're looking at an investment in a property or a vehicle or a piece of machinery, and you want to establish whether it may be a better idea to buy it outright or to lease it, that's exactly the kind of thing that you can model through the goal planning section of Fluidly. The view that you can see up at the top of the page is very familiar, based on the view that we saw on the base forecast. As with that, you can look at it on a weekly or a monthly basis, and you can also scroll backwards or forwards. For those using Fluidly Pro, you have the ability to download the forecast to Excel, and I'll talk more at the end around the difference between Fluidly Starter and Fluidly Pro as well. So that is that's the forecasting side of Fluidly. I mentioned that at the start that Fluidly is very much an intelligent cash flow forecasting product, and we see a real focus as well, an importance on focusing on what a business can do once they know they have a cash flow issue, the kind of now what piece of Fluidly, and that's where Chase comes in. Now, Intelligent Chase is our take on credit control, and how you can help a business to improve their collections. So what Intelligent Chase does is break a receivables ledger down into 3 different buckets. It looks at predictable payers, late payers, and very late payers, based on whether or not those businesses have invoices, or the age of the invoices that are currently outstanding. So predictable payers may be clients that have an invoice which is currently within the date on which the time frame of which they normally pay. Late payers are those clients who have an invoice which is up to 30 days beyond their typically expected payment date. And very late payers are clients who have invoices outstanding that are 30 days or more beyond the end of their beyond their expected payment date. Now, once we've bucketed those clients up into those different categories. The idea is that Intelligent Chase is a tool that you can work through systematically, contacting customers one by one, and updating the information that sits in Fluidly. So if we look here at very late payers, we can see that this client currently has one overdue invoice, which was due 91 days ago. Now it's at this stage that you have two options. So the first option is to send an email chasing that client up, and when you click on this, you'll be presented with a preview of that content. You can edit and adjust this to your heart's content. We've just put something in here as a guidance, and equally feel free to use it. The other option that you have available to you is the ability to make a note. So if, for example, someone within the business who's handling credit control has had a conversation with that particular debtor, then you can add a note, and that will appear in this particular client's record. Now, when you do either of those tasks, it will populate the last chase section here in Fluidly. So it will kind of date stamp that, and it will put another mark up here just to say that that's been chased. This list repopulates once a week on a Sunday afternoon, which speaks to that idea of being able to systematically go through the debtor ledger and speak to different clients and have a comprehensive picture of who has and hasn't been spoken to, or when a particular debtor was last spoken to and what was discussed. So that's a bit about Intelligent Chase. It's also worth mentioning that you are able to download a debtors report in Excel, which will break the ledger down by customers, by invoices, and any comments that are attached to it. Really, really useful if, as an accountant, you're working with your clients on their credit control, or you want to better understand cash coming into the business. You can use any notes that they or their team may have made over that period of time to really inform that conversation. Simon, are there any questions on the credit control side of things before I move on?
Not on the credit control. No, I've got three sort of areas that I want to cover off before we finish. I want the VAT, factoring, and then projected P&L accounts and balance sheets, which I'll come to, Luke, once you get there, and then obviously the price or the investment, and also Annie. I acknowledge your comment. Thank you very much, Annie.
Okay, all right, fantastic. Well, I reckon I've probably got 2 minutes left on the product, and then we can dive into those questions.
Brilliant, thank you.
So the last thing that I just want to show you here is the funding side of Fluidly. So what we have here are a series of pre-qualified offers that we're able to surface to users of the product, showing the different types of funding options that are available to them. Now, here at Fluidly, we're working with around 20 different lenders, and we're able to of a range of different sizes and products, and we're able to surface, as I mentioned, these pre-qualified offers to your clients in the product. If they do decide that they want to progress and find out more information about these offers, it's simply a case of clicking apply here, and what that will do is put you in touch with a member of our funding team that you can see smiling on the top right hand side there, and they will then be able to handle the next steps. If, as an accounting partner of Fluidly's, you do have clients who begin this process, we'll also keep you updated as to the progress that they are making through that process, or even allow you to handle it on their behalf if that is how you're choosing to operate. So Simon, that's that's me kind of having demonstrated Fluidly in a nutshell. I'm conscious you've got 3 areas that you mentioned there. So do you want to kind of ask some questions around there, and I'll do my best to answer those?
Perfect. Yeah. So what I'll do is I'll just put in the chat box, if anybody wants to carry on the conversation, there's the URL for the website, and then you need to sign up as a partner. Luke, is that the...
It's exactly that. So if you go to fluidly.com, if you are interested in getting to know more, speaking to a member of our new partner team, then clicking sign up and signing up as an accountancy practice, and someone will get in touch with you fairly quickly and take you through the next steps from there.
Brilliant. I'll put Luke's email address in the chat box as well. So if anybody wants to go via Luke, they're welcome to do that, Luke. Yeah.
Yeah, that's absolutely right.
Perfect. So cost or investment, how does the pricing structure work?
Yeah, so at Fluidly we run a membership program which starts from £35 a month, and as part of that you get access to everything you've just seen here on Fluidly, as well as our onboarding process. So as part of that, we'll take you and your team through a fairly comprehensive onboarding process to ensure that you're really comfortable and confident with the product and the proposition, and we get you to the stage where you're kind of very happy going out and talking to clients about Fluidly. So we really do guide you through that, and that's both there's kind of telephone conversations and a series of kind of online training modules as well. I know that was one of the questions that you shared with me, Simon, around the training that's available. So we've got a series of CPD accredited training modules that you're able to kind of go through in your own time.
Okay, so that £35 per month, is that per user, per client? What's the...
That is, so £35 a month will give you and your team access to Fluidly, allow you to upload all of your clients to the portfolio view, which we saw on the first screen. From there, you can then invite your clients to Fluidly for free. And if they do want to upgrade to get additional features of Fluidly, then they can do that within the product. Now, in terms of what all of your clients will get for free as part of that £35 a month membership, they will have access to a 3-month cash flow forecast within Fluidly. They'll have access to intelligent chase and the ability to chase clients using emails, and they'll also have access to the funding screen should they want it.
So basically, for £35 a month, all of the customers can get access to Fluidly from a 3-month cash flow forecast perspective.
3-month cash flow forecast, use intelligent chase, as well as goal planner within there as well. So when I'm talking about the forecast, you have these 3 elements that we described, and when you upgrade, should a business wish to upgrade to Fluidly Pro, which is available to them from £39 an additional charge of £39 a month, then they have the ability to save multiple plans and to revisit those later on. So we can, if anyone gets in touch with our new partner team, then they'll be able to walk them through all of that.
Okay, excellent, thank you. Right, so VAT is the fundamental one. How does it handle VAT? How does it work, the calculations out?
Yeah, so the way that Fluidly handles VAT is that it's in exactly the same way that it handles every other account line. It will look at the payment history to build a forward projection. Now, the VAT in that respect is probably a very good example of one of the lines that we would suggest reviewing when you first go down through your cash flow forecast to check that it's in line with your or your client's expectations of what they see their VAT liability being. So there is not a different type of calculation that's going on there. One of the things that we are looking at is being able to track that on a more intelligent basis and being able to pair that up against vatable sales, for example, and having a calculation around an ongoing VAT liability. But right now it looks at it in exactly the same way as every other account line within Fluidly.
So basically, in my language, it goes back, looks at what you paid previously, and projects it forward based on what you've paid previously.
Exactly that.
Okay. And is there any distinction between that in the UK and the US? Sandy's on here from the US. It does exactly the same in dollars as it does in pounds?
Yeah, exactly that.
Okay, brilliant. How does it handle factoring and factoring accounts? How does it work with that?
Yeah, so this is the kind of $1 million question quite often, or the other $1 million question aside from VAT when it comes to forecasting products. It really all depends how it's handled within the ledger. So if the receipts are reconciled as they come in from the funding provider, then Fluidly should be able to handle it. Where it gets complicated, where it can cause issues, is if the receipt of the funding is kind of reconciled as a cash receipt in the ledger, but the invoice is left outstanding on the ledger as well. You can have a duplication of the invoices in terms of the amount. So it's really a case of if the invoices are reconciled as paid or partially paid when the cash comes in from the funding provider, it's absolutely fine. If they're not and both are left open, then it can cause problems. But that's exactly the kind of thing that if you were to come across it and have issues, that our support team here at Fluidly would be able to guide you through and provide assistance with.
Okay. And then does it do a projected balance sheet and cash flow forecast, P&L and balance sheet? So you've got the cash flow aspect of it. The banks will want projected P&L accounts and projected balance sheets. Does it do that?
So it doesn't do that. It just focuses on cash flow forecasting at this point in time. Again, it's a question that we get fairly often from clients, but right now our focus is purely on the cash flow forecasting side of things.
Okay. Xero uses tracking codes for QuickBooks Online. Sorry, Xero uses tracking codes, as do QuickBooks Online. Can you see a cash flow forecast based on those tracking codes, or is it just a whole of company forecast?
So in terms of so no is the kind of straight answer there. Not at the minute. Tracking codes are something we're considering more in the ability to effectively group areas of spend or receipt. So it's something that's on our radar. It's not something that we have in the product currently.
Okay, brilliant. And then quickly, any planned developments? Is there anything that you can share with us with regards to future progress or not? Is it all hush hush and top secret? And
no,
I'm conscious we've got a minute left. So if anybody's got any other questions, I'm clear on the Q&A box. So if anybody's got any other questions, we'll whack them in the Q&A box now. We might just be able to sneak them in.
Perfect. So I'll be quick on the product roadmap. So kind of one of the first things is improving the dashboard when you log in. So adding more and more actionable insights to the home screen, improving the way that the predictions work and the way that you're able to edit and manipulate those within Fluidly, and then also providing greater insights outside of the app. So building in kind of notification tools that will deliver insights to yours and your clients' inboxes. If you're an accountant using the product, insights about your clients, and if you're a business using the product, insights about your business delivered direct to your inbox. So those are really the three focuses: the dashboard, changing the way or updating the way that predictions work, and delivering insights outside of the product.
Excellent, thank you. Just the last question's just sneaked in. So the £35 per month, just for absolute clarity, the £35 per month is for unlimited customers, and it gives them access to the 3 months forecast and the other things with regards to getting the loans and whatnot. But that's
correct.
Per practice for unlimited customers, and it's only if they want to go over and above that and do the forecast, the variances, and to go to 12 months as opposed to 3 months, that it goes up to Fluidly Pro.
Absolutely, and as part of that, we also will offer you support, so live support via live chat, email, and telephone, as well as the onboarding piece, which includes a kind of go-to-market assistance to make sure that you're able to get Fluidly out to your clients successfully.
Excellent, that's brilliant, Luke. Thank you very much for coming along. Just double check on the Q&As, and all done and dusty. So just says thank you very much to everybody for coming along and for some great questions. Again, as I always say on these things, it's the questions that come from you that make these so much different, I think, to the bog standard sales patter and demonstration. And I love it as much as it's a challenge, Luke. I love your enthusiasm to come along and could contribute to that, and the look on your face with some of the questions and the processing to know that they're answered ethically and honestly. And I just think it's brilliant. So thank you very much to everybody who's come along. You're welcome. Welcome, Jeff. Thank you very much, Luke, for giving up your time. And as we said, if there's anybody that's got any questions for Luke, your email address is in the chat box. And of course, you can go to the website and have a look. Is there anything that you would like to say to finish off, Luke?
No, I'd just like to say a massive thank you to everyone for spending the time to listen today and for your questions. And Simon, thank you very much for having me.
You're welcome. Excellent. Thank you very much. And it's bye-bye for now. Bye-bye. Bye-bye.
Cheers.